Good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And the closing trades are looking all right. It's been a fairly choppy trading session. We have been toying around the flat line for the longest time. Having said that, it's a weekly options expiry that continues to impact the market sentiment. And of course, we have seen a bit of a bounce back in the last few minutes. 20,080 is where we are holding. Our PSU banking names, they are rallying quite hard today. It's the private banks which are on the back foot. But PSU banks continue to do all right. Yesterday as well, there was solid momentum there, and that really continued in the trading session today. Metals, they are shining away in the trading session. Top sectoral gainer, Hindalco, Jindal Stainless, NMDC, pick up any of these names. They're all reacting positively. However, FMCG, that has been the stark underperformer throughout the trading year, and for now as well, Aisha, FMCG continues to be on the back foot, though there are spots within it, the likes of sugar, which are doing okay.
Yeah, sugar is doing quite all right. Balrampur Chini has been quite the momentum buzzer from the word go. Even right now, it's sitting put with a 5% gain. But sectorally, what's really charging ahead, it's metals. So pick up any counter, be it a Hindalco, which is sitting on a 3.5% gain, Tata Steel, which is up 2%. You've got an NMDC as well, which is holding out very smartly. The entire metals pack is indeed a buzz in trade as we speak. Next, of course, is real estate and oil and gas. So it's an unusual constitution of winners out there, at least within the large cap universe. But a bunch of stocks as well, which are holding out. And DAM Capital came out with a note on sugar just last evening, wherein it's a conviction buy now for most of the sugar names, be it Dwarkesh, Dalmia Bharat, Triveni Engineering, or for that matter, Balrampur Chini. And across the board, it's a buy call. They're saying that the demand supply is pretty much in favor of the sugar pack right now, and they do expect sugar prices moving in an upward trajectory, which is why you're seeing this renewed vigor across the sugar pack. Talking about metals, Axis Capital has come out with a note on Hindalco, initiating coverage with a buy rating. They're saying both structurally as well as cyclically, it's pretty well placed. That stock, of course, is one of the top movers today. UPL, wherein has now upgraded the stock to a buy. They believe the challenges for UPL are now tapering off. Remember, this is in light with all the commentary that you had from global chemical majors downgrading their outlook and guidance for the quarters ahead. NMDC, there's been a hike in fine prices by about 300 rupees per ton, and that's why you're seeing that buoyancy built in on that stock price. Actually, pretty decent volumes as well. Almost 13 million shares traded at that. Well, what about the index? Are we going to continue to see gains, or are we going to consolidate here for some more time around the 20,100 odd mark? Kunal, hi afternoon. Naresh, welcome on the show as well. The construct of the market, I guess, doesn't change, even if we pause here a little bit, Kunal?
Yeah, it doesn't change. The indices still look very strong. The texture of the markets, internals of the markets are quite healthy, and they're well mixed, because we're seeing a mix of large caps, good mix of mid cap names which have been doing pretty well. There are also those stocks which have been flying high in the last few weeks and months. Those stocks have taken a pause. Many of the stocks have taken a pause. There has been comeback into a few names, but then it's on much lesser volumes than what was earlier. So all those classic ingredients which we are looking out for is set on the index. We've also seen a breakout coming back into the Bank Nifty in terms of indicators, and typically when we've seen that happening in the last 4 or 5 instances over the last 1 to 2 years, we've seen that Bank Nifty has managed to make a new high for itself, or at least cross back about the previous highs to move up higher. So I think looking at the market texture overall and the technical setup, I would expect this time around the Bank Nifty to lead the charge going ahead, and hopefully breaking past about that 46,300 mark pretty soon.
Okay, expect the banking index to really charge ahead and lead the rally. But Naresh, today what's of course leading the rally is sugar and metals. Tell me the top bets there.
So sugars look interesting, and specifically Balrampur Chini, because that's been the stock which has underperformed relatively. The stock has given a breakout today above the 420, 430 mark. So that's one. Second is Dhampur Sugars, which has just made the breakout today. The rest of the names like Awadh, Magad Sugars, etc. have already moved up quite a bit, but are still a buy on dips. But at current levels in sugars, continue to like Balrampur, which is a buy at current levels, as well as Dhampur. In terms of metals, the preference has been mining names, and we've seen NMDC do quite well. So time to book profits out of NMDC. Look at an Hindalco, which has broken out today above the 500 mark. Tata Steel could be a bit on dips, and apart from that, Jindal Steel continues to be the best relative outperformer. Crosses 725, 730 could be another leg up. But at current levels, Hindalco looks promising in the middle pack.
Right. In fact, staying with the sugar space, we spoke with the MD of Dwarake Sugar, Vijay S. Banka, and he's pretty hopeful of sugar prices remaining steady ahead of the festive season.
Well, I don't think there's going to be any runaway increase in the sugar prices because these prices are there to stay till the festive season of Diwali. But even before the Diwali comes, the sugar mills in Maharashtra are going to commence production, crushing and production. So we don't see prices reaching levels of 40 or so per kg. But yes, 3,700 to 3,000 these are kind of levels at which we expect prices to remain steady. And going forward also, since we're looking at a tight supply situation in the coming season, the prices should be sustainable at if not 37, at least at around 3,600 rupees or so. We've had, I think, in this current season of ethanol, I think we should be achieving blending target of about 12%. Obviously, the next year's target is 15%. So the sugar mills have enthusiastically ramped up the production capabilities for producing ethanol. Increasingly, all are looking at sacrificing more of sugar production in favor of ethanol. We have also done the same. We've cut down our sugar production by nearly 30%. So ethanol is a game changer for the sugar industry. It's compressed our working capital cycle also because the payments from we are not required to hold ethanol stock for longer periods of time. The payments from the oil marketing comes in reasonably good time. So it's been a game changer and the margins are also decent.
Okay, that's the cue coming in as far as the sugar sector is concerned. But just wanted to talk about the Bank of America strategy note that was out this morning, because they were making a case that it's large caps that are going to lead the rally and the mid cap and small cap might see potential dips. Having said that, if you look at the markets right now, it's mid caps and small caps that are firing away in the trading session yet again. In fact, almost half of the losses that we had seen a couple of days ago have been made up. There was a 4% cut that happened day before, but a 1% gain yesterday, and today as well we are doing quite okay, and the market breadth is quite strong. Bank of America, however, believes that there's only 2% upside when it comes to Nifty, because their yearly target is 20,500, and they're expecting earnings cuts on IT, metals, utilities and discretionary. It's interesting, Kunal, because they are expecting earnings cut on IT and metals, but if you look at the stock momentum, it's quite the opposite.
Well, absolutely, yes, Nishan. I think, the prices have already started to indicate strong breakout for most of the counters. Now, whether it's the large cap metal stocks, the likes of Tata Steel, etc., even the mid cap names like Hindalco, Jindal Steel have given signs of a breakout. So I think it's a very strong up move for many of the metal names. And we are talking of 2 years and 2.5 odd years of downtrend being reversed for large cap metal names like Tata Steel, the stock which was grinding from 2021 highs, I think, of 145 plus, to a point where the stock had fallen sub 100 levels. So it's managed to recover, not just recover in terms of prices, but reverse the pattern of downward sloping trend line for Tata Steel. So I believe that the stock should make a very strong comeback, and I'm assuming that this may not just be a short-lived price action for this metal major. And same is the case with the IT stocks, large cap IT stocks. Even though again they are a bit late in terms of moving towards a swing breakout as compared to the mid cap IT names, but then better late than never for many of these large cap IT stocks, where we've seen TCS, Infosys getting into a breakout mode. These stocks not falling below their previous lows of September 2022, I think is also another additional sign that strength is far more better in IT stocks this time around as compared to the previous time, which was in September 2022.
Actually, this is a discussion you had in the morning as well, right, with Anand, talking about the mid-cap space and where there are select opportunities there. Because as per him, yes, you can't paint everything in the same basket, but within their financials and certain pockets do look interesting. And in fact, if we have that bite, we should play it up. Because overall, the kind of sense that we are getting is there's definitely quite a few areas of interest. In fact, for IT sector, actually, we spoke with a whole host of experts as well. Listen into their take.
Every year we are going to see the growth. Now this year may be a year of caution, and some of the budgets may have been paused. But next year onwards, we see that return to growth is going to happen. And the IT services spending for the next 3 years is going to be in the double digit, which we have not seen in the past. So I am a bit optimistic from the point of view what we see.
Absolutely. I think selectively, most certainly, more than all out. But yeah, I think that's a stance that we do have. We have a selective stance on the sector. So if I have to name a few stocks within the tier ones, within the large caps and LTI and Mindtree, I think is certainly an opportunity. If I look in the mid cap, mid tier IT, then persistent systems, mine, and if one has to look within the small cap space, then Birla Software. I think these would be some names where there is good opportunity. I think broadly, the mid-tier IT growth outperformance over tier one can continue. Having said that, tier one IT valuations right now are pretty much near the long-term averages. So to that extent, there is some comfort from a valuation standpoint. But at the same time, we do believe that this premium that mid-tier gets on tier one, that's likely to continue much higher levels of sustainable growth.
Okay, let's welcome on board then Sandeep Sabharwal as well and chat about what he's making of the market right now. Sandeep, hi, afternoon. And sugar, let's talk about that, the sweetest pocket in the market right now. Just wanted to understand, since, you do monitor the sector very, very closely, time to add positions further, or would you say wait it out a little bit and wait for a dip perhaps?
Sugar has been one sector which has not performed despite a lot of things going well for them, both in terms of the weather disruptions in India and globally, which is going to cut this year's production growth. And in some countries, we might actually see declines. We see global sugar prices at multi-year highs. And the concern among the minds of investors has been what happens to the state advised price of sugar cane in an election year where political compulsions might lead the government to increase it more, and that would hurt these companies at a time when Indian domestic prices have increased, but they have increased moderately as compared to what's happening globally. But that said, I think the sector is reasonably well placed. So I would think that it should perform. There should be upside in these stocks, at least 20-30% upside across the board in the sugar sector, because it has not participated at all in the entire mid-cap rally.
Take coming in on the sugar sector. Also wanted to talk about paints because today, of course, the top loser at the index is Asian Paints. Let's look at the other names as well. Berger Paints and Indigo, Shalimar. What are all of them up to? AkzoNobel, etc. There is, of course, one factor which is crude. It continues to inch higher, so that means bad news for the paint companies. But the other one is also about the launch of Grasim products, because Aditya Birla Group has announced that they're likely to launch its paints business under the brand name Birla Opus, and it's likely to happen by Q4 FY24 itself. And they are planning a total capacity of 1,332 million litres per annum as well. Sandeep, what's your take about the paint segment? Is this something that one should look at incrementally buying, or just stay away because there's a lot of consolidation, a lot of moving factors with crude?
I don't think crude is such a big dynamic, but it is a dynamic. But I think the bigger concern is the increasing competitive intensity. So when JSW Paints came in, they also were pretty aggressive, but then they took away some part of the market share, but then the existing players dominated. But Grasim is a whole different cup of tea with their presence across the dealer network and the entire Ultratech network of cement dealers, etc. So I think there will definitely be a pressure on margins of existing companies as Grasim tries to take market share because the margins of the paint companies are pretty high. So I think it's a good play for Grasim to initially operate with a lower margin and try to take away market share, because I don't think there'll be quality issues with Grasim. So this is a sector where valuations of the companies are still very high. So I would think that investors should shun this sector at this stage, let the shakeout happen, and look at it 18 to 24 months down the line.
Sandeep, as a portfolio strategy, do you think there is a lot of exuberance and froth being built up in the mid and the small cap universe? Do we need to now trim up positions there and perhaps add more to large caps?
Exuberance is there for sure. I think the way the entire mid cap index has moved, speculative stocks have moved more than the sort of established companies, etc. So there is definitely froth. So we need to be careful what we are buying. There are still opportunities in the mid cap, small cap segment where these companies might do well over the next 2-3 years. But anyone buying into mid and small caps right now needs to be very clear that if there is a sudden significant sell-off, sort of trailer of that we saw a couple of days back, then many stocks could fall 10-20% from where they are right now. I think that's the risk which remains in the mid cap segment. So from here on, allocation should. So I think whoever is fully invested, I think it makes sense to have some cash. Whoever is looking to deploy, I think they should deploy in a phased manner and not jump in right now.
Right, okay. We're going to take a very quick break on that note. Come right back. We'll continue our discussion with our experts.
Welcome back. In terms of stocks which are buzzing around, of course, the PSU banking name. So look at a central bank that's high by 8%. You also have other PSUs in focus. NHPC seems like it's resumed the uptrend because that's now sitting with a gain of around 7%. Talking about PSUs, NBCC is also having a field day, a gain of almost 9%. There was a 180 crore order which they had bagged. Not a big order, but nonetheless, that stock is reacting quite positively as well. But that's the action from the secondary market. What all is happening in the primary market, because there are a whole host of IPOs that we have seen recently, and one which is underway right now is RR Kabel as well, right? Samit is here with us in the studio to talk to us about that. A bit on the expensive side, you would say?
Well, firstly, three companies are raising close to 3,900 crore. When it comes to the valuations on FY24, it would look a bit expensive because it's around 45 times. But the FY25 valuations come down to around 35 odd times, which is cheaper when compared to its peers like Polycab, KEI Industries and Finolex Cables, because they are trading anywhere between 36 to 43 times. And on the financial side, if you see, RR Cable's revenue growth rate was much ahead of what the peers grew around by FY20 to FY23. If you see the revenue CAGR, it was around 31 odd %. But on the EPS side, it's a bit on the slower side. If you see 16% CAGR growth only, in fact, its peers were growing at a CAGR of around 19 to 23 odd %. And the reason behind this was the volatility in the RM prices, because of which the company's EBITDA margins also declined sharply to around 5.8% from 8.3% that we had seen in FY20. Now, the company is looking to raise close to 1,960 odd crore rupees, of which 1780 crore rupees would be an OFS, where the promoter and TPG would be looking to offload their stake, while the remaining 180 crore is fresh issue. The IPO closes tomorrow. The price band is 983 to 1,035.
Sandeep, have you looked at this one closely? Because the entire cables and wire space has again come into the spotlight. The real estate demand is inching higher. There's an entire, premiumization at play wherein the customers are going for more branded players. Any thoughts?
I think these valuations are obnoxious, especially for companies in the wire segment. I think I think people have just lost sight of of the fact that these are cyclical businesses. There will be down cycles also, which also last a few years. And finally, these are low margin businesses, wires and cables. And there is very little for one company to distinguish from the other than some brand equity that gets built up. 50-60 times earnings for such company is absolutely abnormal. 2-3 years ago, these companies used to trade at single digit or 10-12 times earnings, and even then people used to think that they shouldn't trade at more than 15 times. Now people think that 35 times on next year forecast earnings also, those forecasts are also so aggressive. I think this is just a frenzy and people should be very careful what they're buying.
Right. Okay. It doesn't end here. And Samit, tell us all about Sami Hotels. Given the excitement in the market around the entire hospitality sector, I'm guessing would find many takers, this one?
Well, I'm not sure whether they'll find takers or not, because but the the excitement that you were talking about. In FY23, all the hotel companies did post record profits, but SAMHI somehow managed to still report a loss for the third consecutive financial year. That's the detail that we have from FY21 to 23. The company has been continuously reporting losses. Obviously, the company's revenue and EBITDA growth has been much higher than the peers, but that was also because of a low base that the company had seen in FY22. If you see, the company's EBITDA grew by around 8 times in FY23 as compared to FY22. The net debt, now that stands at close to 2,834 crore rupees, and that is the main reason why the company is looking to raise funds. So they are looking to raise close to 1370 odd crore rupees, of which 1200 crore rupees is what they're going to use to repay their debt, while the remaining 170 crore is an offer for sale, where the promoter is looking to offload some part of its stake. Now, given the fact that the company has been loss making and also its debt is high on the book, the valuations are a bit cheaper. The EV to EBITDA for SAMHI Hotels, if you see, is around 15 odd times, while its peers are trading anywhere between 20 to 27 times when you see EV to EBITDA valuations.
Okay, so that's about SAMHI Hotels. Thanks, Amit, for joining us. We'll let you go on that note, but let me take forward the discussion with Naresh as well. Naresh, from the hospitality sector, which is the stock that you like?
So as of now, a lot of stocks have already moved up in the last few sessions. Only Indian Hotels is one which is retesting the recent breakout of 410, 420 that could again scale up towards the 460 to 480 mark. Then Mahindra Holidays is the one which has still been a major underperformer over the long term. The stock used to be 360, 330 back in 2018 and 300 back in 2010. Gave a breakout, has started a new trend. The first move paused at 365, the next one at 420, and now is consolidating 420 to 400 or 380 rather. So this one could be the which could go towards the 500 mark, and the next one is EIH, which is the best one in terms of the relative opportunity. The stock is available at 240, 250. It used to be 220 back in 2006, 2008. So looks very interesting. EIH would be the top pick now.
Right. Sandeep, there's a Yatra as well, and I guess the IPO is going to be opening tomorrow. I mean, this is a company all of us have dealt with, business-wise or consumer-wise, at some point in our lives. But what about its IPO prospects?
I think, actually, I haven't looked at the IPO so closely.
Okay, fair point. Let's just look at what the contemporaries like an Easmy Trip, etc. are up to, and we will just have that stock price, maybe a year-to-date or a 6-month stock price evaluation will just come up for you on your screens. But yes, for the market, it continues to be not been the best of performers. That's down about almost 16% in the last 6 months or so. Continues to be metals, sugar, not much is holding out in the market aside of that. Of course, there is an iShares, M&M, which are also holding out. But just let's map the list of losers. So there's an ITC. We've already talked about how Asian Paints is languishing. But today, the private banks also are not really participating. So ICICI Bank is down about 0.5%. There's Kotak Bank also, which is a laggard. And so is the case with HDFC Bank too. And IT also not doing a whole lot, as I can see on my screens. TCS is at best lying flat, so is Reliance, just marginally soft as we speak right now. But Sandeep, one has seen an interesting trend emerge in the PSB pack, in what the market is now making of private banks, and the fact that most believe that banks is the go-to place now, and largely within the large cap universe. Where do you stand with the banking story, and whether one should dissect it between PSBs and private banks and pick out either of them?
Yeah, I don't buy public sector banks because of various reasons related to governance, the fact that they are losing market share, and the fact that longer term their margins will continuously get squeezed, and the cyclicality on their NPA cycle is much greater than that of the private sector banks. On the private sector side, we've seen consolidation across the board in most large banks. I think one has to make a pick out of what one likes. So I like Axis and ICICI Bank, so I think they look good. IDFC is something we have to keep a lookout on, but then now there's no discount per se, and it's done so well that I wouldn't be a buyer at these prices. HDFC Bank, we need to watch out what happens post the entire CRR, SLR requirements getting met and how it impacts the margins and profits. So I think that could be disruptive for HDFC Bank, at least for 12 to 18 months.
Quite a few disruptions at play there, but PSU banks is something which still do not interest Sandeep. But on that note, Sandeep, we'll let you go. Appreciate you making time for ET now. But time now to slip into a very short break. When we come back, we'll perhaps see that weekly options expiry move coming in. So watch out for that.
Back with closing trades right here on ET now, and we're holding on around that 20,100 mark for both the Nifty spot as well as the futures. Metals, sugar continue to be the brightest spots. But the Sony saga, that clearly continues, and Axis Finance has now moved the NCLAT against the NCLT approval. And my colleague Ankur Mishra joins in with more details on what exactly is happening with the Sony case now.
Yes, for all those who thought that NCLT has approved the Sony merger and this is the end of it, there is a new twist and turn to that story. Axis Finance has moved higher court, that is NCLAT, that is the appellate tribunal and higher court than NCLT, and their contention remains the same, that their dues needs to be cleared before the merger is finally approved. Hence, on the approval of NCLT, there is a petition which has been moved to NCLAT. Now, as far as the process is concerned, right now there is a rejoinder, meaning the notices have been sent to the companies, that is the entertainment, for their reply. All depends whether or not NCLAT admits the petition and also puts a stay on Sony merger or not. So that decision has not been taken yet, but as far as the first step is there, Axis Finance, one of the key NBFC which had raised objections against the Sony merger because their payment has not been made, has moved NCLAT for now, which is kind of negative for the Sony merger as of now.
Okay, Ankur, we'll watch out for that story, how it really pans out. Thanks so much for making time. But Pashupati Alwani is also joining us on the show, so let's welcome him on board. Pashupati, hi. The move that we are seeing in the PSU banking space, do you think there are more legs to the rally, and any stock that you would want to discuss from that pack?
Well, I think that all PSUs are doing well simply because the government is spending and has a mission to get a lot of projects done. And obviously, the PSU banks are easily going to supply money for that. So I think that as long as that continues, one needs to be long the PSU banks simply because the government is not going to default. They're making a good spread on their interest, and they're also expanding their book. So all those are good things for banks. So yeah, and of course. I've always been the top of the list has always been SBI because it's always been, an interesting bank to follow, and it's got lots of subsidiaries which are also doing well, and will continue to, keep going. Whereas private banks can say no, and PSU banks normally don't when the government sends their request.
We're talking about public sector entities. Let's also listen into an exclusive conversation that my colleague had with one of the PSUs, and this is Oil India. The chairman is Mr. Ranjit Raj. Listen into what he had to say.
Exploration, development and production would encompass about 7,500 crore investment on a standalone basis from Oil India Limited for the current year.
On windfall gain taxes, since crude prices are, crude prices are increasing. It's beyond $90 per barrel. And we are expecting that the government may increase windfall gain taxes on crude production going forward. Do you think it is impacting on your overall revenues?
As far as crude oil production is concerned, our focus is to enhance production, and that would add to the revenue kitty. The price hike in terms of international benchmarking and the consequential taxes or levies are a given. So our focus would always remain on physical performance.
I'll ask you last question on your Russian investment. Your investment in Russia, what's the status? Is it a concern for you? What's the status now?
Russian investment categorically is not a concern. These are two producing fields, dividend paying. I must share with you. We have already got about 80% of the initial capex that was invested as part of our dividend. Initially, the repatriation was pretty smooth. We were getting the dividend back to to our subsidiary level at Singapore. Now, because of the unfortunate incident, sanctions have come in. So about 150 million US dollar from Oil India point of view is actually lying in one of the State Bank of India branch in Moscow. So it is as safe as that. It is a matter of time that we will able to negotiate and get the money getting repatriated. Multiple channels of discussion processes are being evaluated, including the legal options, alternatives, G2G engagements. So it is absolutely not a concern.
Okay, before we move forward, let's just take some closing strategies as well. Naresh, what's on your list?
Okay, Kunal, what about you? You have any closing trades that you're identifying for us?
Well, go with Bank Nifty futures. In fact, my sense is that the Bank Nifty futures is heading towards a breakout. So this could actually be a very good time for the Bank Nifty to start performing. So I would probably look to go long on the Bank Nifty futures and expecting a new high on the banking index in the next couple of days.
Okay, so that was the, take coming in on the banking index, but I beg your pardon. Mr. Advani, your take on the IT sector?
I personally have not been as hot on the IT sector, but the thing is that it benefits whenever the rupee gets weaker, and the rupees moved from 75 to 83 in the last year and a half. So obviously the IT sector will benefit. Some of the companies, the larger ones, seem to have got their act together. The mid-cap ones are aligning and probably are poised to be taken over. But there seems to be enough business, despite the fact that they had to change direction because of COVID and find new ways of making money. So it's not a bad sector to be in. Foreign investors tend to buy it because it is representative and has a large chunk of the market. So, it is, but I'm not so excited about that particular sector personally.
That's the take coming in on the IT pack right now. But Pashupati, quite a few IPOs as well coming in, almost, one on a daily basis, literally. Tomorrow you've got Yatra opening, you've got, the Zaggle IPO as well, you've got Sami Hotels, so many IPOs, and of course RR Cable as well. Any of these DRHPs that you may have analyzed?
I'm actually not in that IPO market because I find that the allotments traditionally have been very small. These days you're getting much larger allotments because they're not so oversubscribed like they used to be. But once in a while you'll get one which is hugely oversubscribed. It's better to actually let them settle and then decide, in the aftermarket, maybe a month or two down the road, and then decide whether you want to take a position, and then the supply is also there. So yeah, and of course, a company, as you had mentioned earlier in the show, Yatra is something that's part of our day-to-day lives. So, so it will get picked up, it will get absorbed. And so far, I did see an article last week which showed that IPOs generally have performed well in the last 6 months, and they haven't disappointed investors in terms of those who have invested in them. So hopefully that's another conduit for retail investors to come back into the market.
Coming in fact, Zaggle Prepaid, talking about that, it has got quite a few marquee investors. Ashish Kacholia, there's Himanshi Khela, ValueQuest. They have invested almost 98 crore rupees together. So that stock too has been seeing a lot of interest, at least in the pre-IPO circle. Let's see what the IPO subscription figures really throw up. But that's for the primary market. Talking about secondary market and what the action is on the screen for you right now. Of course, it's NHPC, which is doing quite well. DB Realty is up 7%. IOB, Triveni Engineering, NMDC, Mahindra Holidays. These are some of the stocks which are doing well in the trading session. In fact, the other one is Sami Hotels as well, which is going to be coming out with IPO as well. Just wanted to get a take from you on the hospitality sector. In the listed space, right from Indian Hotels to Mahindra Holidays, all of these stocks have run up. Pashupati, is there any stock where you still see value within hospitality and tourism?
Well, it looks like people are visiting India for business, and also people are visiting India for tourism. We're going into the beginning of the season for the tourism, and all the hotels are quoting prices that are a lot higher than they were 12 months ago. So, what should I say, last Diwali to Christmas, they're quoting probably 20%, 25% higher. And so it looks like this year is going to be a good season for them. So then you buy. I prefer the big ones. I like Indian Hotels and East India. Indian Hotels is on a tear upward. ahead of the rest of the pack. East India has lagged a little bit, but probably provides value at this level.
Now, the chart's also indicating, I don't know if you're tracking EIH or not, but would EIH be a better buy right now than Indian Hotels at 422 thereabouts?
Well, actually, yes. In fact, Indian Hotels has already managed to rise up to that 425 mark, I think a couple of weeks back, then corrected back towards 400. And then, I think somehow it's settling into this range of 400 to 425 broadly over the last few weeks. So I don't see any major momentum shift of volumes happening for Indian Hotels. But EIH could be a classical case. The stock has been into a phenomenal uptrend last, I think, 4 months. The stock has been from 150 to 255 or 260 mark, where the stock made a high this week. So it's been a phenomenal uptrend for EIH Hotel. The long-term charts from 2020 lows are also quite exceptional for the stock. So I think it could probably be a better buy at current levels. Of course, the beta of the stock is significantly higher as compared to Indian Hotels, where the risk reward may be 1:2, but we may be looking at swings of 8 to 10%. So the position size has to be traded accordingly. But the charts for EIH Hotel are much stronger as well as better as compared to Indian Hotels.
Okay, EIH over Indian Hotels. But let me take it across to Sharad as well, find out what are the stocks being talked about across the dealing rooms this afternoon. Sharad?
Well, yes, in focus we are having Dr. Lal Pathlabs, and what we are hearing from the dealers is in certain counters, HNI buying has intensified. Now do remember the important level of 50-day moving average has been crossed again, and importantly the volumes also, if you look at it, it's coming at almost 6 times its 20-day average. Also, the company is expected to meet institutional investors, both the domestic front as well as the FI fronts, especially the names of Inter Institutional and Capital Research Services from September 18 to September 19. Now, of course, 2 days ago, also they had met Jeffries on a one-on-one meeting as well, and certain FI meetings are also underway when it comes for the company. Now, going ahead, of course, looking at the triggers, the non-COVID revenue segment, that is expected to grow over the next 2 years itself, and the company itself has retained its guidance, especially for its EBITDA front, ranging between 24.5% to 26%. Now, also the company is single-handedly focusing on increasing its volumes, but the target market, the expansion strategy, that is expected to kick in for Tier 3 and Tier 4 regions. Also, apart from this, as per our channel checks are suggesting, the revenue and the inquiries that has increased for their bundling test packages, which is called Swast Fit. So over here, the inquiries have been strong, and also overall the demand has been strong for this new segment.
So take coming in on Dr. Lal Pathlabs. In fact, if you look at the volumes as well on Dr. Lal Pathlabs are quite high. Not just that, Suven Pharma, Aster DM, Narayana Healthcare, a lot of these, pharma names continue to see buying interest, even if it's not visible in terms of the stock movement as such. The volumes are on the heavier side, and that's telling you about the increased interest. What about you, Naresh? Any topics from the pharma vertical?
So 2 names are breaking out today. One is Granules India, which has taken out the recent swing high, good volumes and price action today. So this could head up slowly towards 360 to 380 mark. Second is Biocon, which has been testing 275 to 280 multiple times over the last few days, as well as over the last few months. So that is shaping up for a big breakout about 280. So these 2 small names look interesting in the pharma pack, and both of these names have consolidated over the last few years, not performed really well. So would be looking at these 2 names to outperform from here on.
Okay, so that's the take coming in as far as the pharma sector is concerned. Overall in the market, the breadth continues to be quite positive. In fact, there is a bit of momentum that we have managed to scale past the level of 20,100 now at the index level. So that expiry move is at least working out on the positive side for the markets right now. In terms of the other movers, I can't spot any names apart from, let's say, the cement PSU names and a few other pockets which are doing okay. But Pashupati, apart from financials, which is the other space where you see quite a bit of value, because whether it's power stocks, railway stocks, defense stocks, they've all run up.
Well, I think the government between now and the elections next May are going to do a lot of infrastructure, try and complete a lot of projects. And that's going to put huge pressure on cement, steel, chemicals that are used in construction, as well as the construction companies that have got the work. So I think those are the ones that you can quite safely buy, at least for the intermediate term of the next 7 to 8 months, which is like a good run. They're going to get work, they're going to get it fulfilled, and there's going to be project after project that's going to get completed. And we're seeing it in roads, for example, and railways. Modi ji just inaugurated 508 railway stations 2 weeks ago in a pretty impressive ceremony. It was done virtually, but at least, they're all moving, and there's refurbishment of stations and upgradation of all that. So there is a lot of spending going on, and it's driven by the government. So I think anything that's associated with that will be pulled up with the market, and that's the space to be in.
Okay, that's the take coming in on where the infrastructure story is headed. It's really the usual suspects. I mean, metals looking quite okay. There's NMDC, like we flagged off earlier, after them hiking the fine steel prices by about 300 rupees per ton. UPL after that upgrade from antique, wherein they believe that challenges are now tapering off. Pashupati, what is your own sense on the entire chemicals space right now? Because a couple of these global majors did come about and sort of sounded of warning signals, cut their guidance as well, and chemical stocks back home as well did feel the heat. Now what?
Well, the challenge with the whole chemical sector is, we really don't know what's going on in the sector in China, and China has the volumes to be able to, really affect prices globally. I don't think anyone is saying don't buy Chinese, but the thing is they've had some difficulties getting supplies out, which seem to be getting over, and therefore the chemicals are in the market globally, and therefore we're not able to export. And we've had a good run of last 8-9 months, but that run is unfortunately over because the supplies have caught up. So I would be a little bit wary and just sit on the sidelines and wait for things to happen and wait for news. That's my thought on the chemical sector.
On the chemical sector, but let's also get the channel checks going as to what we are picking up as far as the export data is concerned, and Lisa is joining us just for that.
Right, the chemical exports data is out, and the data is pointing at a continued weakness in the export market. Let's look at the companies one by one. The Atul sales, that's down owing to weakness in the epoxy resin sales. Moving on to Aarti Industries, the quarter-on-quarter performance was strong, but Y-on-Y it's still down. Moving on to SRF Limited, the realization in exports, that is down 21% on month-on-month basis. The average realization, which stood at around $9.7 per kg in July, that has reduced to $7.3 per kg. Now, what the analysts are quoting that if the current realization it sustains for the next 8 months, then it can impact the EBITDA by around 5 to 10%. Now, SRF, they have not exported any shipment of R134A gas, which is a refrigerant gas, to the USA market. And remember that this is the largest market for SRF R134A gas, because around 80 to 85% of the sales of this gas came from the US market in FY23. Moving on to Navin Fluorine, the poor performance in the CDMO business, that continues, and no dispatches were seen to Corteva, Bayer, or even Kumau, which is their key customers in this month, and that only means that the MPP plant has been underutilized. But on the other side, there were companies which saw some recovery in sales, and that was Deepak Nitrite. The sales was up around 51% on month-on-month basis. Clean Science recorded a recovery of around 21%, and Vinati Organic sales, that was up around 60% on month-on-month basis. So that was a channel check on the export data for the chemical sector.
Okay, that's all that you need to know around the chemical exports data. But in the meantime, let's get in some BTSD trades as well going. Naresh, what's on your list?
That would be a buy on UPL. The stock has seen a good volume and a price reversal today. Looks like a short-term trade out here towards 650 plus, stop loss at 625. Second is a buy on ONGC, a new 52-week high, a clean breakout here, stop loss at 186, target price of 192.
Kunal, what about your strategies?
I'll stay with the optimism on the PSU banking stocks. So Bank of India is one of the first names which I would suggest as a buy. Excellent chart for the stock, breaking out of that 105 mark today. So would revise the targets higher to 114. Traders could look at a fresh buy, maybe a BTSD buy at current levels. Stop loss at 103. And from the commodity slash metal names, NMDC is something which has been on a breakout mode today. So the stock has broken out of that 150 mark so far. Looks very attractive for a strong BTSD as well as a positional trade. 159 as an immediate target. Stop loss at 144.
Okay, so those are the top recommendations coming in from our chartists. But talking about the underperforming sector today, and of course for the year as well, Kunal, that's FMCG. What should one do if you have positions or stocks there?
I think FMCG lost its shine, I think, in June 2023 when the markets got into that risk-on mode, when mid caps started to show signs of strength, and you saw HUL, Britannia, I think many of the other FMCG names start to get into a correction. ITC was the only exception that time around, but I think from August, ITC also started to get into a correction from 490, 495 levels. So I believe now that with the market still into a risk-on phase, I don't expect the FMCG stocks to get into an outperformance anytime soon. I think these stocks would go back to the traditional range or time-wise consolidation. And even from start of 2023, or I think a couple of months of 2023, from there many of these FMCG stocks had rallied up significantly high. I think Britannia, Nestle made a fresh high for themselves in the month of May, June, and I think post that the stocks have consolidated. So they're coming back to their mean reversion or that moderate phase of risk for themselves. One of the points which I mentioned a couple of months back for the FMCG stocks, that the usual beta for these stocks are 0.6, 0.65. And in this rally, or in that rally which had shaped up, the beta had jumped up to 1.2, 1.4 for these FMCG names. So there has to be a natural correction of this beta coming back to that 0.65 for these FMCG stocks, which is a process of at least another 3 months or so for these names. So I don't expect these stocks to do any kind of a major uptrend. You might have those odd phases of rise and then a correction for the stocks, but net they should be more flatlined.
Okay, that's the take coming in on where you may see FMCG headed. In the meantime, let's also address pharmaceuticals. Today, of course, Torrent Pharma is seeing a bit of a downtake. But Kunal, you were making the point that maybe Pharma also is in an uptrend along with banks and IT?
Well, yeah, pharma stocks and in fact, very select pharma stocks have started to show signs. The move actually started off with the mid-cap pharma names. I think if I'm not wrong, Aurobindo Pharma was the first one which had given a breakout, followed by Zydus and Glenmark. And then you would see the usuals, the likes of, I think, Sun Pharma, Dr. Reddy, they start to show signs of strength. And I think it followed by DV Slab recovering from that sub 3,000 mark to 3,500, 600 levels where the stock is trading. And now many of the other pharma names like Granules, etc., also seeing signs of a breakout for themselves. So, again, it's a strong sectoral up move where there are few leaders which the markets tend to identify. They get the first advantage of scaling up higher and then breaking past about their resistances, and then most of the other underperformers, they tend to follow up. But then again, I would probably believe that Glenmark and Zydus Life are two of the better bets this time around, even with the kind of breakouts these stocks have shown in the last 6 odd months.
Okay, point taken. These are some of the stocks that our technical experts are talking about. Just let's take a look at some of the other names as well which are buzzing around in the trading session. Just 6 minutes left for the day to end, and it's been a pretty okay day actually by the end of it. Of course, the opening gains that we have seen has got trimmed, but nonetheless, at least we're holding on to 20,100 level. Pashupati, wanted your take regarding real estate stocks as well. They have been doing fairly okay for themselves of late. Again, is there a pocket that you're looking at, let's say maybe Mumbai facing, real estate names, or these are the South Indian names, or even NCR is coming back now?
Yeah, I think Bombay and NCR have lagged because there's a lot of supply and it's taking time. And, I don't think the flats are cheap enough. The builders are making still money. And in Maharashtra, they're also waiting for the FSI to be increased, in which case the builders will make even more money and more people will be crammed into the same space. We're obviously seeing some traction in good quality, second tier town builders. And of course, the big names like, DLF and all are doing okay. I mean, they're fine. And it's a proxy for growth in India as more and more people buy homes. People are going to come into all the real estate companies. So there are lots of big ones. It's a big component of the index, and therefore the sector is enjoying itself.
Yeah, and not to mention the valuation that Bombay 9 got for its Worli plot as well. But in the meantime, let's just address some of the other movers in the market. ONGC sure has shot up today. There's M&M as well, which is looking good. About a 2% bump up coming in there. About 1571 thereabouts is where the stock price is. And then I want to see where Tata Motors too is, because there's been a new unveiling from the JLR stable today. Tata Motors a little bit tempered, about 0.2% or so. Pashupati, your take on autos right now, sort of in a consolidation mode, although they continue to be standout performers like an M&M or Tata Motors. Would you think good time to perhaps add positions here?
No, autos, I think I read somewhere that there's also some build-up in inventory with the dealers. So I think it's going to go through a bit of a phase of consolidation, as you mentioned. So I wouldn't jump into autos at these kinds of levels. I just sit on the side. I think that interest rates are higher. A lot of two-wheelers and four-wheelers are financed, so that is going to put some kind of cap on the market. And again, we are followers. So in the US and UK, the same thing is happening. The cars are not moving out the doors as fast as they used to. So it's a little bit slower. So just hang on. There will be ample opportunity, in my opinion.
Just hang on, there will be more opportunities coming if you want to buy into the auto sector. Last 3 minutes, so quickly just Pashupati, a word on the entire consumer discretionary, space that we are witnessing an uptrend into, whether it's an ethos, whether it's landmark cars, whether it's, the other names coming in as well in the, uptrading kind of trade. Is there any name, or even the QSR space for that matter, any stocks that you like?
Well, the QSR is here to stay. So I would actually, look at that sector. I've not actually focused on that sector for a bit, so I need to review it. Again, the new wave sectors also have been performing well. So I think those also need to be taken a look at. And there are opportunities. One has to just look and see which are the companies that are going to survive and be around in 3 to 4 years' time. Those ones will be 4x, 5x, and their competitors may be left in the dust. So I think this is a great time to really be picky and to choose stocks of high quality and good management.
Okay, Pashupati, we'll let you go on that note. Thanks as always for taking the time out and joining in. Counting down to the market close, while the Sensex 2 made a record high intraday today. We're closing indefinitely off the high point of the day, just circling around the 20,100 mark. Metals clearly has been that one leading pocket today. So be it an NMDC, which is closing in with a 6% gain at the intraday high, Hindalco, which is closing in with a 3% gain, or for that matter, Tata Steel, and the smaller players as well, which are all closing in with handsome gains. And then, of course, sugar has been the other darling of the street today, but a 5% uptick coming in for Balrampur Chini. The entire space actually, Dwarikesh, Triveni Engineering, all these stocks have held out very, very smartly today. UPL, of course, has been one of the top performers within the index, about a 4% uptick coming in there. ONGC gave a due support, about a 2% bump up there as well. You had a Divi's, M&M, Techem, Apollo Hospitals, which all saw some traction coming in. But on the flip side, there was also weakness coming in from an Asian Paints, a Tata Consumer, a Britannia, ITC, LTIM. Similar was the story with an ICICI Bank as well, which closed in very choppy today and then finally closed in a little bit soft. Kotak Bank, HDFC Bank did not participate in the move today. Bharti, after that near 3% move yesterday, closed in absolutely flat. And again, a very choppy ride for the stock today. TCS flat and Reliance Industries as well closed in absolutely flat for the day. Some of the other buzzers from within the broader market, which by the way have closed in favouring the advances, about a 133 count as opposed to 53 to the declines for the F&O universe. So there's Balkrishna Industries, Granules, Chola Finance. These have been some of the good performers in trade. And on the flip side, there was Z, Torrent Pharma, ACC, Coal India, which were some of the laggards. So closing in quiet off the day's highs, but the construct for the market doesn't change. We'll pick up all the action tomorrow morning at 8 a.m. Thanks for watching.